So let's go to a new one. We said Turtle Beach. Is that what it is?
Turtle Beach?
Yep.
Oh, that's the name of the thing?
Turtle Beach Corporation.
What's the ticker symbol? Oh, here. Okay.
H-E-A-R.
H-E-A-R.
So this is a company, guys. It's a smaller company, okay?
So Seth said,
Okay.
I just want to bring this up, what Seth said about this earlier. He said that they make headsets for Xbox One and PlayStation. So anyways.
Oh, headsets for gamers. Yeah, somebody just said that. Okay.
All right, market cap 407 million, PE of 10.5 check mark, profit margin of 10.76 check mark, with a healthy gross margin here. Hardware is hard to have gross margin in, guys. Gross margin, if you remember, is for every unit you sell, how much goes to the bottom line. 37% is pretty good. This is before all overhead fees. So 2 checks so far, not bad. Free cash from last year, 45 million versus an average of 22 over the last 5 years. So it has doubled. Now, the reason I like this so much is, I wonder how much of this jumped up though, because with the shutdown, people probably played a lot of video games.
Yeah,
right?
sure.
I'm sure video games were very popular shutdown.
And you couldn't really get systems and all that.
Yeah, no dividend yield. That's not surprising. It's a small company. Look at this return on assets, very large, 27%. Why is return on invested capital not showing up? Are they a new company?
No.
Did they just go public recently?
No. They have at least 2 years of being public.
Okay, well, there's a bug. So for all my Paul Super Shorts who've been watching this, way to catch that. All right, revenue, guys. Oh, wow, look at this. 174 million to 360. Wow. They're a new company. They only did 500,000 in 2013 and then jumped and skyrocketed to 186 million. Look at this, though. This is weird, guys. So one of the things, remember, the 8 pillars are about looking at the numbers and trying to tell a story. This story tells me when they started generating big revenue, decline, increase, decline, increase, decline, increase. Why is that? I don't know. It's still a check mark, and it's still going up, but there's a lot of ups and downs along the way. So you have to figure out why that is. Net income, a loss of 87 million to profit of 38.9 million. Check mark there. So that's good. We have a check mark there. And number of shares outstanding, I think, are probably going to be going up. And sure enough, they are going up by a lot. 12.3 million to 15.3 million. That's an X, guys. So you own less of the company than you did. Oh, wow, look at that. I mean, big time. Yeah, I don't like that. It keeps going up every single year. Ugh, they keep issuing more shares.
Yikes.
Don't like that.
Yeah.
Especially when the PE is so low.
Right.
Let's go to the balance sheet. I bet you this is awesome. 169 million versus 98 million. Check mark there. And their total liabilities are 105. So they really have $65 million extra. So their market cap of 460, you have to take off $60 million, $65 million. So you're basically paying $400 million for the company. Let me slow down and explain that again. Their current cash on hand is $169 million. Their total liabilities, which is every debt the company owes. As an example, if you're at home, you have a house mortgage, if you have $100,000 in the bank and you owe between your car, your student loans, your house, credit cards, everything, less than 100 grand, you're sitting pretty. You can write all your debts off with the stroke of a pen. That means when the company's bought, the buying company can take all the cash, pay off all the debts, and still have $60 million left over. You can subtract that from the purchase price of the company. So now the company, instead of being $460 million, is now around $400 million. So it makes the PE lower, makes the multiples all lower. This is the mother of all great things. It's hard for a company to go broke when they have more cash on hand than all debts involved. Does that make sense? Mm-hmm. Awesome. Now, free cash flow. Negative 5 million to a positive 45 with an average of 23. But look at this, guys. The last 3 years have been awesome. 37, 37, 45. Man.
Paul.
Yeah.
Can you explain why they would keep issuing shares when the stock price is low and they're cash rich?
They might be making acquisitions and people want shares for it. There's a million reasons. That's part of the story you have to go answer. That's the question you have to ask. Go to the 10K and see why they're issuing more shares. It's a very, very good question, especially on a company that's selling at such a low multiple. Why, and with such a high return on assets. Why are they issuing more shares? I don't know. It's confusing. Now, I'm going to pull a little audible here, guys. The company seems more stable now. Look at the last 5 years. I'm going to scratch these first 2 years. I don't even care about them. Why? Because they're so obscure and it looks like they've gotten to a healthy spot here. Let's take an average of $40 million. Times 20 is 800 million. We said the company was they're currently selling for 400 million. Ding, 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 ding. This is a good one, guys. I like this a lot. I really like this a lot. So, the question to ask yourself, now we're looking at the quantitative part of the business, the numbers part. The numbers parts make a lot of sense. They've got good margin, they've got good return on assets. The only thing I don't like about them is they're issuing more shares. You got to answer that question. So now you need to determine, how is this company in a field of other hardware makers? There's a million ways to buy. There's a million companies that sell headsets, make headsets. You've got to determine how theirs differentiates from others. Are they a long-term business that can keep growing?
Mm-hmm. This stock, you can see, it does a lot of these sweet spot reversals, and that means that the trend changes in the middle of the sweet spot, and just as it happens. This one time over the past year, this thing has changed. It's reversed above in that overbought area. So for me, I'm thinking this is going to change its trend again, and the red line will turn up, and you'll start getting green candlesticks moving up. So I would avoid this one from a trading perspective, unless you want to go in there and do like a swing trade, which is on your, I'll just pull it up here, give Paul a break. This messy chart, which is just all of this detail. So you have your moving averages on here, you have your resistance lines on here, etc. You have your volume on here. So if you wanted to, you can wait until this thing gets up over these two moving averages, which is the 25 and the 50 day, and go ahead and add to it. And you probably will get a nice run at about 36 bucks. Conversely, if you're waiting for it to drop, you can wait till it breaks through that 100-day moving average and goes down. But I think the likelihood is that it's going to change trend, go positive on us, and you'll be able to buy somewhere over that 50-day moving average.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.